Hello guys, and welcome to my YouTube channel. In this video I'll be talking to you about why it is risky to convert your naira to dollars or USDT, that's USD Theta, a cryptocurrency. Now the inflation rate data is out and it is 17%. So the common interpretation for this is that the purchasing value of the money has declined by 17%. A quick comparison of inflation data with other countries like Saudi Arabia is at 0.4%, the United Kingdom is at 3.2%, and the United States is at 5.3%. Now the consequences of this is that Nigerians are finding different means or investment vehicles to preserve their hard-earned naira from devaluation. They want their 100,000 naira to be 100,000 naira on a month-on-month basis. Now the common trend is to achieve this by buying the dollar and preserve their naira earnings. While in theory this sounds like a well thought out plan, or hedge as we call it in finance, there are certain flaws to it. Now engaging in this form of hedging inadvertently makes one a currency trader vulnerable to volatility. Now foreign exchange rates can change rapidly in response to any real-time economic and political events. The tendency to always buy at whatever price will possibly lead you to buy at high prices, and when it hits a negative inflection point, the purpose of preserving value is defeated. Now the fundamentals appear to be changing soon, and there are signs that the Nigerian economy would soon be supplied with dollars. Nigeria has announced plans for another visit to the global market through the issuance of a $6.2 billion Eurobond in October. JP Morgan, Goldman Sachs, Citigroup, and Standard Chartered have already been selected as international book runners for the Eurobond issue alongside local firm Chapel Hill Denham. Access Banks plc recently oversubscribed $500 million unsecured Eurobond that drew interest from top-grade investors globally, should bring optimism that investors will rush the federal government Eurobonds. Now the recent $3.35 billion Nigeria received from its share of the IMF's SDR special drawing rights has boosted the country's dollar liquidity. President Buhari's recent request for a $3 billion loan, which has been heavily contested, is likely to fly as it could get approval from the Senate, where his party is in the majority. Now, Nairametrics reported yesterday that the Senate President Ahmed Lawan gave the Senate Committee on Foreign and Local Debt 1 week to consider the President's loan request and revert to the Senate next Tuesday. Additionally, there have been indications that India refiners, Nigeria's largest buyers of oil, are increasingly boosting run rates amid newfound confidence that there will be a revival in oil products demand. The information in the market is that some refiners are planning to lift runs to 100% of their capacities for the rest of the year, with oil at $74 to $75. It's a good time for Nigeria and Nigerians. Now let's break it down. In investing, there are 3 principles to use as guidelines. You have the investment objective, your risk appetite, and the investment horizon. Now in this particular case, the investment objective of many Nigerians is to preserve their earnings in foreign currencies. They just want value, not profit necessarily. Any profit is just a bonus for their venture. Every year, Morgan Stanley picks the year's best safe haven currencies. The US dollar was picked in 2020 as the best safe haven currency. The Japanese yen and Swiss franc are relatively mentioned as safe bets. Now the risk appetite envisages the investor's risk tolerance. Can Nigerians afford to handle the volatility of currency movements? Would they be perturbed when they realize they bought at the top as the naira appreciates. If we glance at the central bank's data on the monthly exchange rates over the last few years, we corroborate the dangers of buying USD every time, especially in the height of speculation frenzy. Now, investment horizon refers to either a short-time or a long-time horizon. In the short term, where there's a need for personal liquidity, engaging in hoarding dollars or speculative trading is riskier than in the long-term horizon. Using the data presented, one with a liquidity need would have sold his dollars at a lower price. The value of one's earnings would have suffered the double whammy of loss in dollars and the inflation one ran away from. In a longer time horizon, time would smoothen volatility. In the cryptocurrency space, Nigerians are trading naira for USDT, USDC, and BUSD in peer-to-peer transactions. Now, the above coins are referred to as stable coins pegged to the dollar. According to dollar data found on Paxful and local bitcoins, using a 90-day period, Nigerians traded 115,077,936 dollars, the highest volume of transactions recorded in Africa. And this excludes data from Binance, a more popular cryptocurrency exchange. Peer-to-peer transactions appear to be the sophisticated way Nigerians are engaging in currency swaps. So now, what's the way out of this predicament? Well, certainly not saving cash. As billionaire investor Ray Dalio puts it, cash is trash. Cash offers no real return or yield, and it is negatively impacted by inflation. The investment objective of Nigerians is valid. However, the real hack is earning in foreign currencies. Different ways to do that are by offering services on Upwork, Fiverr, etc. Partnering with relatives and friends in diaspora on how to channel their investments back home, and lump sum investing in dollar-denominated assets with commercial banks and investment banks. Another option is investing in assets and equities that offer returns higher than the inflation rate. Last year, the Nigerian All-Share Index in Africa's largest economy recorded its best return, rising 45.7% in 2020, the most among 93 equity indexes tracked by Bloomberg. This made it the world's best performing stock market. Some experts have advised the CBN to make treasury bills attractive for investors with a low risk appetite. Now, the dollar has taken a beating since last year. Looking at the dollar index, it's far away from its highs, so Nigerians are paying a premium for cheap dollars. Conclusively, it is advisable that if one does not have a need for dollars, engaging in precautionary and speculative demand for dollars can be counterproductive if the opportunity cost is a loss in earnings as a result of volatility. The truth is, no British citizen is monitoring exchange rates daily, although you would argue the British economy is more stable. The obsession with the exchange rate is partly responsible for why people refer to Nigeria as a dollarized economy. Aggregate speculative demand for dollars leads to pressure on the FX market and inadvertently affects the exchange rate. So there we have it, guys. Thank you for watching this video. Please don't forget to like, subscribe, and please make a comment down below. Thank you.